What's going on, my financial friends? It's your friend Jack here, and today I am excited once again. It is Monday, and that means it is week number 3 of our Wealthsimple Trade $100,000 tax-free savings portfolio challenge with Canadian stocks. At least that is the challenge right now. We're going to try to get to $100,000 with Canadian stocks in our tax-free savings account. And this is episode number 3, or the third week that I've been doing this. So if you want to check out the other weeks, I'll leave a playlist down below where you can check out all the progress I've been making and look at it for yourself. If you have not seen the other episodes or the other weeks of me buying stocks, essentially what these episodes are me looking at my portfolio, seeing where I'm at, and then going ahead and buying a stock live on the video to show you guys what I'm doing, what I'm investing in this week, what I'm taking a look at, my strategies and my thought process behind my portfolio. And this challenge is once again to reach $100,000 in my tax-free savings account. So this is going to be a long challenge, but I'm going to be doing videos every single week until we hit at least $100,000, which may be a while, but stay tuned and strap in because I'm going to do it. We're going to do it. You're going to do it. Let's do it. So real quick, before we dive into me buying the stocks live, let's talk about the overall plan for this $100,000 challenge. At least my current plan. This could be adapted and changed later on, but at this point in time, here is the general overview of what I'm trying to do with my account. So I'm actually a pretty new investor. I haven't been investing for that long. I have been very frugal most of my life, and I have pretty good financial habits, so I've saved up quite a bit of money that I can, on a monthly average, put into this portfolio. So right now I'm aiming around $100 to $115 every single week, basically putting into this portfolio. Sometimes a little bit less, sometimes a little bit more. And the overall concept of this is to use my tax-free savings account, which, if you don't know, any profits, dividends paid in this account, any gains are going to up your contribution room essentially, because a tax-free savings account does have a maximum contribution room of $6,000 per year, and that starts when you're 18. So I technically have around $20,000 contribution room, but there is a max contribution room on these accounts to earn capital tax-free, not to pay taxes on it, and that does affect the overall basic how much you're going to make from this passive income source, if it's taxed, if it's not taxed. So that's why we're doing it in a tax-free savings account. If you want to know more about tax-free savings accounts and get caught up on that, I'll leave a video on the screen here. Plenty of videos on YouTube. I've also made one myself about how tax-free savings accounts work and what you need to know about them. But yeah, we're going to be doing it in a tax-free savings account. Another thing that is very critical to my investment strategy is time. I'm using the power of compound interest, and time being on my side, I'm not trying to time the markets, I'm trying to spend time in the markets. I'm trying to hold my investments long term, meaning all the companies that I'm looking into have basically my intention with them is to hold them as long as possible. I want the basically longest return, because the longest returns do compound more the longer you have something, and I really want to invest in companies that I believe are going to be there in the long term and going to be moving upwards in the long term of like 10 to 20 years. So although this portfolio and this challenge may not have super exciting, plus 1000% penny stocks in it, there's a reason for that, and I don't want to lose contribution room on my tax-free savings account either, because that is how it works. You can lose contribution room, which is something I definitely don't want to do. I'm being very safe with my investments and only picking companies that I really do believe in from a financial standpoint and from just a growth standpoint in the Canadian economy in general. So coming back to the contribution aspect of my account, the idea is with these dividends reinvested and all the dividend investing I'm doing and the growth in my portfolio, that after I reach my contribution limit every year, it's going to be up to more than just $6,000. If I were to take out my account, I would have a higher contribution limit in the account going forward, because I have grown assets in this tax-free savings account. Really, they should call it a tax-free investing account at this point, because if you have it in just a savings account, keep in mind that you are pretty much not going to be paying taxes on 0.001% interest rates anyways that you're getting from your savings account, bank account. So keep that in mind. If you do have a tax-free savings account, it's not a bad idea to put some money into investments so you can actually utilize that tax-free part of things. Okay, now let's get into the exciting stuff where we actually buy some stocks. So I went ahead and I put on my stock buying shirt. Actually, this looks more or less that I'm on vacation, in the Bahamas, but nonetheless, you could buy stocks while you're in the Bahamas. Anyways, I put on this shirt so I can make some more, educated financial decisions because I'm pretty sure your brain gets bigger when your shirt has more buttons. And this shirt has like extra buttons just to make your brain bigger. So we should be good for this episode. You definitely don't want to miss the stocks I'm buying while I'm wearing this shirt. Now let's hop into what stock we're going to be buying today. You're going to see my portfolio right now is sitting at $514. Most of this is not invested. I do have $207 waiting to trade. I have some extra money in there because I have been looking at stocks that I already own, seeing if there's any, dips. And if there's a dip, sometimes I like to buy a few shares because, on sale stocks is pretty good stuff, especially when I like the company. I don't mind buying. So we're going to see here AQN right now, and that's my main holding in this portfolio. I did actually buy one extra AQN stock in my other video where I got paid my first dividend from them. If you want to see that video, I'll also leave it down in the description or on the screen. But yeah, 45% of my portfolio, a lot of my portfolio. I currently own 7 shares. I'm down $4 on this stock. My average price is $20.61. Right now they're selling for $20.03. Kind of makes me intrigued and wanting to buy more at this price. Really good price for this stock. I have honestly like 4 videos on this stock now because I really do like it. They're a renewable energy group and I'm going to continue buying into this stock, honestly. I might even buy an extra share today. I'm not 100% sure yet, but I really like AQN. But I do first need to diversify my portfolio a little bit. We have utilities right here, AQN, and we have utilities right here, Canadian utilities. And that's a lot of my portfolio, 47% plus 11%. So over 50% of my portfolio is utilities. And then what else we have in our portfolio is Bank of Nova Scotia, a nice dividend-paying stock. Only have 1 share of Bank of Nova Scotia, and they yield about 4.64%. Pretty good. Got some nice yields on dividends in my portfolio. The nicest yield of dividends is definitely this one. It's a real estate. It's a REIT, so it's a real estate sector investment trust. Lots of big words, but it's Smart Centers. They do own a lot of retail space, and I really like this stock as well. Total return, 12 cents, but the dividend they pay, 6.64%. At least right now it's at 6.64 because their share price is $27.78. So pretty good dividend paying stock. They've been in the game for quite a while, and 40% of their tenants, I believe, are Walmarts. So really good stuff. Really like that. They are mainly in the retail space pretty much for all of their real estate investments. But now we got to get down to what are we spending our money on today? What stock are we going to purchase? What are we looking at? And I haven't fully made up my mind yet, to be honest with you. I was hoping to do that while we're looking here right here. So we have some energy companies on the list. The classic Enbridge, very popular, high dividend paying stock with 7% yield right now. And, an energy company, pretty good. Fortis, I have on my list, but I'm not loving them right now. I think they're a longer term hold. There's a lot to be said about them, but the main one I had was, Enbridge, and then their competitor, which is Pembina Pipeline Corporation, selling at a bit less, but also have a bit smaller of a dividend. But still, this is looking like a really good buy for me. I know they are competitive to Enbridge, and they are, energy company that I believe is in the gas sector. And look here, right here. So they do, transportation, pipelines, facilities, marketing, and lots of stuff like that. You're going to see, I don't even know if you can read all that on my screen, but I still really like this company because I do think they are in it for the long term. I don't think they're going in anywhere in the next 10 years, maybe in 20 years. Renewable energy might come in and say, hey, get out of our way. But for the long-term side of things, in terms of like 10, 5 years, I think this is still a really good company with a high dividend yield that I could use in my portfolio to basically reinvest dividends and just, more or less catapult my contribution room and my portfolio forward a little bit more because of their high dividend yield. Another thing that really catches my eye about Pembina Pipeline Corporation is that over the past 5 years, there's been a little bit of growth, quite a bit of growth for a 6+% paying dividend stock, which you don't usually see when the dividend is that high, usually you're sacrificing your growth pretty much all the way to get that high of a dividend, or not all the way, but a lot of that growth is sacrificed. And when I'm looking at this 5-year chart, it looks pretty nice. Obviously, they had that hit back in March, and they haven't quite recovered. I believe their 21 or 2020 kind of year was down in revenue, meaning it's going to be harder for them to pay dividends. But I really think the fact that they're still paying the dividends is a sign that they have a lot of faith in their investors and a faith in themselves for them to push through these hard times and actually still come out on top. And look at the 5-year right here. And then I'm going to go over to Enbridge right now real quick. We're going to go to Enbridge. The 5-year for Enbridge, it doesn't look so good. I don't like the 5-year for Enbridge. It's just my gut feeling that I don't really like Enbridge. I know they have a 7% dividend yield. And honestly, I wouldn't mind putting some money in Enbridge. I think they are going to succeed as a company over the next 5-10 years. Oil and gas, I don't think is going anywhere very soon. But overall, when I'm comparing the two, I do like Pembina Pipeline Corporation a little bit better, just because I see a lot more growth potential in them, as well as a high-paying dividend. I think Enbridge dividend is really nice, definitely something to look into, and you don't have to worry about the share price too much. You're going to be getting paid that nice dividend either way. But I am looking for growth in terms of the stock price, the market price their shares are selling at, as well as their dividends to be upped. So I think for today's episode, we're going to go to Pembina, and I might come back to Enbridge at some point, but I did want to put some money into the energy sector. Technically, the Algonquin stock is, a little bit of energy, but they classify it as utilities because renewable energy is like kind of a gray side, at least as far as I'm aware of. And it's considered a utility stock first and foremost. So I want to get some, first and foremost, energy stocks in my portfolio. And I really like Pembina Pipeline Corporation. What I'm going to do here is I'm going to buy 3 shares of this, which is going to be about $100, I believe, over $100. So we're going to do 3 shares of this, and that's going to be what we're buying today. So I'm going to put a buy. We're going to go next, and oftentimes I will press limit buy, right, and only buy for the price that they're selling at. But you can do this. I'm just showing you guys this. You can put in the price that the share is currently shown at, which is 15 minutes delayed, to ensure you don't get gypped a few cents. But for today's episode, I want the order to go through right away. Last week I did put a limit buy in, and the order actually never went through, so I had to put in another order. But the next day I did get the price that I wanted, so that was pretty cool. We're going to do 3 shares at market price, and right now it's saying $36.97 per share. Not sure how accurate that's going to be for the 15-minute delay. We're going to confirm the order. We're going to done, and usually the order gets filled right away. It is complete. We're going to go ahead, click this notification, and see what we're at, see what happened, see what we got the actual price for. $36.97, I believe that's what we put in. So we got the price we wanted. The market was on our side today. I'm already up 3 cents apparently. So that's pretty awesome. It's already went up a cent. But yeah, that's what we're buying today. Pembina Pipeline Corporation, very high paying quarterly paying dividend stock that is in the energy sector. And I honestly think this company is going to be around for at least another 10 years. So I'm liking the long-term growth potential. And at some point, let's say renewable energy just takes over the world and oil and gas are completely done because there is a finite amount available. I'll still have a lot of hedged up funds towards Algonquin renewable energy compared to what I do in Pembina Pipeline Corporation. So before I end the episode there, buying those 3 shares of Pembina, I'm going to go ahead and I'm going to go to Algonquin. It's selling for 20 cents or $20.04, which is actually about 60 cents less than my average price. So I'm going to go ahead. I'm going to buy 1 more share of this company. This is probably my favorite company that I've put money into so far, especially in this portfolio. We're going to click 1. We're going to continue. It's going to be a market buy. We're doing that as well. I can't help myself sometimes. $20 for one of these shares, pretty much even, is really good. Just 4 more cents than $20, so almost under $20. And I'm very happy with that. The order was filled, and we got it for a drum roll price of, if this would go down here, I don't actually know, but $20.05. So pretty good stuff overall. I really like that. And yeah, this is my portfolio so far. I hope you guys enjoyed this episode. Real quick, before we end the episode, if you guys want to smash the like button if you enjoyed it, I'd really appreciate that. And also, I do have a spreadsheet which I track all my investments on. I will go over that in a separate video if you guys want me to. It's not very crazy. I have a separate video on how you can set up your own spreadsheet and how I did mine. If you want to check that out, I'll leave it down in the description as well. Super easy dividend tracker spreadsheet for Canadian stocks. Took me a while to get that figured out, but not that hard to basically manage once you have it figured out. And yeah, thank you guys so much for watching this video. Hope you guys enjoyed it once again. And with all that being said, I'll see you guys in next week's episode, or maybe on, Wednesday's video, or Friday's video, or Saturday's video. I don't know, but thank you guys so much for watching. Hope you guys are still earning and learning. It's been your financial friend, Jack. Peace out.